Hello everyone, today we utilize the powerful charting tool known as Andrew's Pitchfork to map the precise long-term trend channels. The current price action is demonstrating perfect respect for the median line, which acts as a dynamic pivot point for the market's trajectory. As long as Bitcoin trades above this median line, the path of least resistance remains clearly bullish. Switching our view to the market profile, we observe a thin low volume node or low time price opportunity TPO zone immediately above the current price level. This lack of prior trade acceptance suggests that once the breakout is triggered, the price will slice through this area quickly due to minimal resistance and supply. The cumulative volume delta CVD has been consistently painting a picture of aggressive net buying, which indicates that buyers are willingly paying market price and absorbing all available liquidity. On the on-chain side, we are closely monitoring the short-term holder realized price, which must be defended at all costs as it represents the average cost basis of near entrants. Conversely, long-term holder spending behavior remains dormant, with no significant distribution detected, confirming that the seasoned investors are holding for much higher targets. We are seeing a slight slowdown in the overall USDT market capitalization growth rate, but this is coupled with capital flowing from small altcoins back into Tether. This internal stablecoin rotation is a classic sign of traders consolidating risks and preparing capital for a major swing trade or an explosive BTC move. The upper parallel line of the pitchfork represents an ambitious but achievable price target for the coming weeks. Traders should use the confluence of the pitchfork median line and the short-term holder realized price as their absolute bottom stop level for any long positions. Today, we are filtering the market noise by utilizing Heiken Ashi candles, which are currently painting consecutive green bodies signaling sustained bullish momentum. The primary focus of our technical view is the near completion of a bullish Gartley harmonic pattern on the daily time frame. This sophisticated structure projects a strong reversal zone known as the D point, offering a high probability entry for aggressive traders. On the fundamental on-chain side, the spent output profit ratio SOPR has reset perfectly back to the critical 1.0 level. This reset means that average profit taking has completely subsided and coins moving on-chain are no longer being sold at a major aggregate profit. This SOPR move often marks the end of a correctional phase and the beginning of a fresh impulse move. Furthermore, the MVRVZ score remains well within the long-term accumulation zone, suggesting that Bitcoin's market valuation is still highly undervalued relative to its historical cycles. This confluence provides a strong macro argument for aggressive entry. We are also monitoring the significant dominance shift occurring, where Bitcoin dominance is breaking down while Ethereum dominance is simultaneously climbing. This pattern is a crucial risk on indicator confirming that market participants are increasing their exposure to altcoins, signaling confidence in the broader crypto market health. Regarding USDT exchange flows, we have recorded massive withdrawal spikes over the last 48 hours. These large movements away from centralized exchanges strongly suggest that large entities are moving capital into secure cold storage or deploying funds into long-term decentralized finance projects. This sustained off-exchange activity drastically reduces the immediate supply available for sale. The completion zone of the Gartley pattern acts as the final decision point, so prepare your stops and targets meticulously for the anticipated reversal. Volume-weighted average price BWAP anchored specifically to the major global trading sessions. The Asian session initially marked a lower low, but the London and New York Opens saw massive absorption of liquidity near the session low VWAP anchor. We are applying a unique price and time vibration analysis, which strongly projects a critical high volatility pivot point coinciding precisely with the New York close in the next few hours. This specific time window is expected to finalize the short-term direction ahead of the illiquid weekend trading period. On the macro on-chain side, the reserve risk metric is currently sitting near historically attractive low levels. This placement suggests that the long-term conviction of holders is high relative to the price, providing a compelling risk-reward opportunity for new investment. We are tracking the transactional velocity of stablecoins moving between centralized exchanges and major decentralized finance protocols. In increased velocity signals aggressive and confident deployment of capital into high-yield or risk-on positions. The premium on USDT pairs in several developing economies is expanding significantly, which confirms strong localized capital flight into dollar-pegged assets globally, underpinning the stablecoin's crucial role in the ecosystem. Your intraday strategy should utilize the current hourly VWAP as your primary trailing stop level. A confirmed candle close below the VWAP trend line signifies a high probability spout short opportunity act towards the developing mid-session support and logarithmic regression channels to determine the long-term health of the Bitcoin trend. The price is currently holding comfortably above the main regression line, which is an extremely strong macro bullish signal confirming the validity of the multi-year bull market structure. We are positioning ourselves perfectly within the crucial midpoint of the current Bitcoin halving cycle, a phase which historically precedes the most aggressive parabolic price action. The macro view is further supported by the Bitcoin rainbow chart concept, showing the price firmly planted in the accumulate or high zone, indicating undervaluation relative to the long-term trend. The on-chain side, the CoinDays destroyed CDD metric has remained consistently low, which is a powerful indicator that older coins are staying dormant and long-term holders are refusing to sell into this market strength. This lack of old money movement drastically reduces potential sell pressure from hodlers. We are observing a persistent negative reading on the exchange net position change, meaning the aggregate flow of Bitcoin is continually moving off centralized exchanges into secure private wallets. This sustained reduction in exchange supply is a major catalyst for future price increases. Furthermore, the stablecoin transaction count is spiking sharply, indicating high transactional activity, particularly from retail investors or smaller institutions rapidly deploying capital into the market. This high stablecoin velocity confirms growing participation and demand at these price levels. Traders should view the lower band of the logarithmic channel as the ultimate macro support level for dollar-cost averaging strategies, known as the inverted head and shoulders (IHS) pattern on the weekly time frame. The neckline of this massive reversal pattern is the single most critical price level to breach, because a confirmed weekly close above it will activate a huge measured move target. On the technical front, the accumulation distribution line ADL shows strong positive divergence from the consolidating price action. This hidden divergence suggests that smart money buying volume is quietly entering the market despite the horizontal price movement. Furthermore, the seldom used swag bread thrust indicator adapted for